Now let me talk about the trade we played over the week. Okay, this was the trade. So let me remove this so that I'll just show you another example. Now what I saw here was this. Price gave this move, cleared this low, went up, wicked down. The same pattern. You see what price did? Price clearly, so forget whatever is here. Price took out this high and closed below. So I was anticipating that, all right, since this 4 hours candle closed below, I want to see how the next candle will close. You see, it closed completely bearish formation, a bearish engulfing. All right, so I was anticipating I'll see if price will return back, because this now is my external range liquidity. As I saw price returning back, I want to capture price to that side. Then I saw this week that was here. This week, that's 4 hours candle was my internal range liquidity, because this is now my structure. Since we are bearish on this low, this is A, this is B for me, and this is C leg. So this B leg, this last candle, I knew price was coming for it. So I waited for price to come into this zone. Let me see what price will do. You see, price cleared that out. I sent this to the community and we're to this trade. Price took out that week, fill this tiny fair value gap here, clicked on this, and you see that fall. But apart from price falling like this, because this was just my entry, I just played here. This was my entry here. Yes, price should come and take out this week, and then we can capture to this external range liquidity. There, that was about a 1 to 2 point, 2.2. Okay, so we took it. I knew price was taking this. I actually held to this zone. I held to this zone 3.3 before I closed. Now when price came and captured this, after price captured this, then this is what the next trade I also took. I said, all right, why people were trying to see price come back here to buy, I want to ensure that if price comes here, I want to sell when I see that 4 hours distribution. That 4 hours giving me that distribution, and price gave it here when price returned back to this zone. Because obviously now, if you are against the trend, okay, this was A leg, this was B leg, and this was C leg. So price should capture this and we go lower if you're against the trend. But since we are bullish, this is what price did here, which the trader also caught. Look at this candle. You have to read the candles. You have to read the candles. Price took this high and clearly closed below, moved away. So I was waiting for the next candle formation. Price came back to this candle and became bearish. Then I knew, all right, we are in for this trade. So what did I do? I was looking at price coming back. This is my internal range liquidity. This week was my internal range liquidity. And my external range was this week, this candle here. For a start, price came in there. We got almost a 1 to 2.5. So I caught this also. Now look at what price did when price came back to this is a structural zone. This is a structural zone. I'll show you what is a structural zone. Let's go to the line chart. You see there's a structural zone. So I was waiting for price here. If price come here, I want to see what price was going to do. So price came here. Price clearly filled this place and moved away. You still have to, it's just the concept of liquidity. Price came here, tapped into this structural zone and moved away. So I said, all right, if this candle, this bullish candle took out this bearish candle and moved away, this is a very solid rejection. So I'm waiting for the next candle, which was this. That's my internal range liquidity. I waited for that candle. If price come back to take it, that was just my direct entry. That was my entry. price should take out this other candle as internal range liquidity, and then here's my external range liquidity. This high is the immediate external range liquidity, this high. So that was my entry. I'm currently on this trade. Yes, this equal highs here, this is liquidity here. So I'm expecting price should come for all of these equal highs that is here. This equal high, this price should at least get to this level. So right now we have this to be captured. I might be wrong, but I'm still bullish on this, and we have this. This is the overall place I'm expecting that price should, should come, and that will give us almost a 1 to 13 if price gets to that zone. So you just have to understand the concept of internal and external range liquidity. Price will capture internal range liquidity, then go for external range liquidity. Now, if we are to continue this trend, this is probably what price will do. After taking external, price will come, create internal range liquidity, go up. When price is coming back, price will come back to capture it, and then we continue the trade. So once the high is taken out, external range is taken out, the next thing price will do is to come for internal range liquidity. And this is what some persons call inducement. Is the same thing. Internal range liquidity is the same thing. So if you want to trade internal and external range liquidity, you must be able to spot your trading range, identify that accurately on the weekly, on the day, on the 4 hours, and use your 4 hours for entry after a sweep of internal range liquidity. Thank you guys. Don't forget to subscribe. See you in the next video.